Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. Big tech austerity drive set to continue. Amazon is planning to lay off 10,000 employees starting this week, according to reports. Facebook's holding company Meta recently laid off 11,000 employees.
Elon Musk sacks a Twitter employee via a tweet after he contested the new CEO's remark on the microblogging site being slow on Android devices. The billionaire, however, deleted the tweet later. The Android developer was offered jobs by social media platforms Reddit and other companies on the same thread. These companies assured him, "We won't treat you like this."
WhatsApp's head of India, Abhijit Bose, and Director Public Policy of Meta India, Rajiv Agarwal, have resigned from their positions. Shivna Tukral, Director of WhatsApp Public Policy in India, has now been made Director Public Policy for all Meta brands in India. Meta had recently sacked around 11,000 jobs across the globe.
MeitY warns Google and other intermediaries of punitive action for violating user data privacy. Reacting on Google settling privacy cases in US for $392 million, Minister of State for Electronics and IT Rajiv Chandrasekhar says the proposed data protection bill will put an end to such practices.
Singapore-based Sea lays off more than 7,000 employees, or around 10% of its workforce, over the past 6 months. The information reported the e-commerce and gaming firm withdrew its e-commerce revenue forecast for the year in August.
Roadside assistance startup Ready Assist raises $5 million as part of their ongoing pre-Series A round led by Howin International Fund, SPC. The funds will be deployed to further enhance the company's service network.
Instant meal bowl company You raises 20 crores in its Series A funding through a mix of equity and venture debt from independent investor Ashish Kacholia. The round also saw participation from DPIIT's Startup India Seed Fund scheme.
SoftBank, whose holdings in Paytm, Policy Bazaar and Delivery are currently worth $1.8 billion, will pare its stakes gradually over the next 2 years so as to not trigger a panic selling as the lock-in for pre-IPO investors in the three companies expires over the next 10 days, says Money Control.
Google Play announced its own UPI-based automatic payment option for users in India who pay for in-app subscriptions. The new Google Play UPI autopay payment option will help users make recurring payments with ease with using any UPI application that supports the feature.
Collapsed crypto exchange FTX said in a court filing that it was in contact with financial regulators and it appointed 5 new independent directors at each of its main companies, including Alameda Research. FTX said it has been in contact with the U.S. Attorney's Office, SEC, CFTC, and dozens of federal, state, and international regulatory agencies over the past 72 hours.
Those are the headlines we are tracking for you this evening. Straight to news just coming in. Abhijit Bose, WhatsApp head of India, and Rajiv Agarwal, Director Public Policy at Meta India, have resigned today. Shivna Tukral has been appointed as the new Director for Public Policy at Meta India. He was previously the Director for Public Policy for WhatsApp India.
From Meta to Twitter to Microsoft, big tech's austerity drive only continues, and according to reports, Amazon has now joined the list. The e-commerce major is planning to lay off 10,000 employees this week, which accounts for about 3% of the firm's total workforce. Shilpa Ranipeta joins us now with the latest. Shilpa, massive layoffs across Silicon Valley. Take us through the companies that have fired their employees this year.
11,000 at Meta, 10,000 likely at Amazon, 6,000 at Snap, nearly 4,000 at Twitter, about 1,000 each at Microsoft and Salesforce. These are just some of the big layoff numbers that have come in over the last couple of weeks. The human resource downsizing began a year or so ago, with mortgage lender Better letting go of over 3,000 people across multiple rounds. It has now extended to big tech, once considered the safe haven of job security. Now, according to job tech platform TrueUp's tech layoff tracker, over 183,000 people have been handed the pink slips so far in 2022, and analysts say that we may not be at the end of the jobs cut cycle. How did we get here, though? The simple explanation: excessive hiring fueled by optimism that the shift to tech solutions in the wake of the pandemic would not get reversed or slow down. Now, tech companies are known to hire in droves, but with people now returning outdoor, going back to offices and doing more things offline, engagement on these tech platforms has been dropping steadily. Now, this has resulted in revenue growth taking a hit and has cannonballed into a fall in valuations. Then came Russia's invasion of Ukraine, heightened inflation, rising interest rates, and companies across the board were hit for a loop by these stocks. Now, tech leaders have since gone on record blaming these shocks for drastic measures that they have had to take. This is from Twitter's founder Jack Dorsey saying, "We grew the company too quickly," to Meta co-founder Mark Zuckerberg saying, "This did not play out the way we expected," to even Stripe co-founder and CEO Patrick Collison saying, "We overhired for a world that we're in." Now, companies are being forced to cut costs, prioritize growth and increase efficiency as companies rework and realign their priorities, and freezing hires and job cuts cannot be ruled out.
All right, Shilpa, many thanks for giving us a lowdown of the big tech layoffs that's been happening. Appreciate you joining us. Moving on. HR tech platform from Asia, Darwinbox, has announced the inauguration of its global headquarters in Hyderabad. The new 1,000-seat site spanning 75,000 square feet will empower the brand's consistent business growth globally while enabling it to further tap into local talent. The venture says the headquarters will spur the company's expansion strategy and technology prowess in the global market. To elaborate more on this, joining me now is Darwinbox's co-founder, Rohit Chainamane. Rohit, welcome to Startup Street. You've said that the global headquarters in Hyderabad will help Darwinbox actualize its from Asia to the world vision, as well as support the ambitious plans to double business by 2023. If you could tell us how this 1,000-seat global headquarters will fortify the brand's strong business growth.
So I think, thank you so much for having me on the show. So quickly start off with, we are a HR technology platform, take care of the end-to-end needs of organizations, HR needs, or an employee lifecycle. So today we work with 700 plus companies across 3 major geographies: India, Southeast Asia, and Middle East. And now we're looking to go global, which is get into newer markets like Australia, Japan, USA as well. And this team that we're building out of the headquarters, we're building out of the Hyderabad location, is predominantly on the product development front. So because as we grow into newer geographies and as we look at expanding into multiple products, we need a sizable organization in Hyderabad, which is building this for us as we grow. And that's where the headquarters will help us attract the right talent to build this product.
All right, Rohit, at a time when we are seeing massive layoffs and most companies putting a freeze on hiring, you're looking to hire 300 new full-stack engineers for product development and implementation. How soon are you looking to hire this number? And are all these positions for India, or is it global?
So we're looking at this mostly in India. This is basically the positions we're looking at to hire over the next 1 year. The plan is to basically beef up the team on multiple aspects, which are very relevant for the new geographies we are growing into. So while it looks like 300 at a whole, each of these is broken down into smaller teams, which are building specific products or building for specific regions, which in itself are doing well as businesses individually.
Okay. Rohit, you also plan to get to an IPO in the next 3 years. In fact, the firm is expected to achieve profitability by 2025, and you're hoping that Indian operations become profitable by next fiscal. If you could elaborate on these plans and what makes you bullish.
Yeah, I think more than being bullish, Shruti, there, I think if you think about any SaaS business, right? So the major spends that go below the gross margin level are R&D costs and sales and marketing costs. And as sales and marketing, as we spend more time in the region, and we've been present from 2016 in India, the need for sales and marketing reduces because there is good word in the market. Customers start referring you from one customer to another, and you can sell better from references. So your cost of new acquisitions keep coming down, and the build that you do specifically for the region also comes down. So that itself will allow you to get profitable in regions which you're already present in. Most of the investment is going into the newer markets that we are launching in. So for example, Middle East is something that we launched last year. This year we're launching the US. That's where most of the spend is going, and that will take its own time to become profitable. But in a market like India, where we've been present for the last 6 years, we'll turn profitable soon.
Okay, so you're looking to expand into the US, but tell me, what markets are you eyeing apart from US? Also, give us a revenue split between India and the other markets you're currently present in.
So today we are predominantly India. 65% of our revenues come from India. A good 25% comes from Southeast Asia, which comprises of 5 markets or 5 countries as a whole, which is Singapore, Malaysia, Thailand, Philippines, and Indonesia. Then about 10% comes from the Middle East region, and about 5%, because it's a very new part of it, comes from the US. So that's the present split.
Okay.
So our intention, of course, is to become number one in the markets that we are already present in, and then move into newer markets like Japan and Australia as well, along with the US. So that's the plan at this point of time.
Okay. Rohit, the HR SaaS market is a $30 billion opportunity, and you claim to have a market share of about 25 to 30% in India. So how do you plan to grab a bigger pie of the market? What's in the pipeline? What are the new product areas you're looking at?
So I think that's a great question. So for us, at least, India, Asia as a market, as we mentioned, I think we want to get to number one in Asia, right? And which is not as big as a market as the US or the European markets, which are more evolved as markets. But the intention is to go into those markets as well and make a significant dent there. As a product, I think today we cater to most of the employee life cycle. Where we are spending a lot more energy or a lot more investment is going in is on the employee experience front. We're building surveys, rewards, recognitions, and also some bit on the AI front, where we're using data science to think about how organizations can hire better, how organizations can promote better, understand their employees better, etc.
All right. One final question, Rohit, before I let you go. You turned unicorn in January this year when you raised $72 million as your Series D funding round. Are you looking to raise more money anytime soon?
No, Shruti, at least not on the horizon, as I think we've been a frugal company always. I think the money we raised, we're looking at lasting us more than 2.5 years. And hopefully by turning profitable next year and beyond, I think we should be needing lesser needs for fundraising.
Absolutely. And Rohit, we of course wish you the very best for that. Many thanks once again for joining us on Startup Street.
Thank you so much, Shruti. Thanks for having me.
Moving on, health tech startup CureBay has bagged 50 crore rupees in a Series A round led by Eleva Capital. The Odisha-based startup, which was founded in 2021, enables last-mile distribution of primary healthcare services by partnering with other healthcare providers in the ecosystem. So how does the company plan to use the funds, and why is Eleva Capital betting big on this startup? We are now joined by Priyadarshini Mahopatra, the co-founder and CEO of CureBay, and Jyotsna Krishnan, the managing partner at Eleva Equity. Ladies, thank you so much for joining us on the show today. Priyadarshini, let me come to you first. Now, you're a health tech platform that serves the underserved. So take us through the kind of services you provide to patients in the remotest areas in Odisha, and how do you make it affordable for them?
Thanks for having me on the show, and it's Priyadarshi. So we are an innovative health tech platform that's focused on bringing high quality and affordable healthcare to people living in remote and underserved locations. Our model is hybrid. So we allow the physical healthcare ecosystem players like doctors, pharmacies, hospitals to actually aggregate on our platform and collaborate real time to deliver healthcare outcomes. The second part of our model is a network of e-clinic or satellite centers, which are physical centers where we have trained healthcare workers providing assisted healthcare. So the idea is to really bring down high quality healthcare right at the doorstep for people living in remote locations and impacting 1 billion lives.
Absolutely. Jyotsna, let me bring you into the conversation right now. So what made Eleva Capital bet big on CureBay? What was the rationale behind backing the company?
So Eleva is a rare firm that goes in early but invests meaningful capital at the early stage, right? So, and that's the reason why we do few investments. We've spent a lot of time on the ground in rural markets, and our big realization was that primary healthcare is an important need. It's unfulfilled. There are customers who are willing to pay for it, and it's a huge gap. You can't force fit an urban model into the rural context because you need to custom design that solution. And that's what was exciting about what CureBay brought to the table. It's a phenomenal execution-oriented team that brings a rare combination of execution firepower as well as perspective, which is very grounded. So that was exciting for us. We knew there was a massive need. So it's one of the few investments we're making.
All right. So Priyadarshi, you're looking to launch about 100 e-clinics over 12 months. Take us through the kind of locations you're looking to expand into. What are the timelines that you've set for yourself? Also, what's the traction you're seeing at these clinics, and how do you plan to use the fresh fundraise?
Very good question. So first, in terms of locations that we're really looking at solving for access. So we're going to places where in 5 to 10 kilometer radius, there is no healthcare available, and maybe tertiary healthcare is about 50 to 100 kilometers away. So those are the kind of locations we are looking at. We're starting at Orissa. We are a density model. So we're going to go deep. We'll probably open 100 plus e-clinics in Orissa itself, but we are actively considering going into adjoining states. We are evaluating Chhattisgarh and Jharkhand. And in the next 12 months, we'll be probably 100 e-clinics across this region.
All right. And Jyotsna, bringing quality healthcare, especially to rural India, has always been quite a challenge. So what's the opportunity you see in this sector right now?
Honestly, like I said, the most important piece is the end market is ready for quality. They are willing to pay for quality services, and they end up actually spending a lot on healthcare because they need to rush to the nearest city for anything that is nearest to quality. They lose income in the process. There's transportation costs. So anything which is doorstep delivered, leveraging technology is a huge opportunity. It's not pure tech. It is blended distribution. So it's assisted tech. And that's the beauty of the distribution model.
All right. And Priyadarshi, take me through the kind of revenues that you have seen for your company. What are the targets that you've set for yourself going forward at this point?
See, the target for us is definitely to impact 1 billion lives, because we believe the current healthcare ecosystem in the country at most caters to about 300 to 400 million people. And there's still 1 billion people waiting to get high quality, affordable healthcare. So that's what is really driving us. In terms of the early success that we have seen, we've got people coming back to us to get more and more services. They start with a consultation service. They get into more sophisticated services in terms of taking pharmaceutical, in case of even tertiary reference with super specialists. So we believe we're building a very, very strong traction because it's a customer-centric model. We're really looking at, how do you ensure that you start working on the life cycle of people and slowly start moving them from attending just chronic acute conditions to really moving them towards preventive.
All right, so impacting 1 billion lives, that's the target that you've set for yourself. Jyotsna, we're currently going through a funding winter. Do you expect this to continue? Does Elevar still remain bullish on India's startup ecosystem?
Elevar is a big believer in businesses that are focused on structural profitability, which means you focus on customer sentiment as against investor sentiment, right? And that always is good for any business model. If you design your products right, your customers pay for the services. And as long as you're measured in building the foundation before you start the journey of hyperscale, all these businesses have massive potential given how untapped the market still is, especially when you go to a layer of the population that is below the well-served population by mainstream corporate India, right? So we're very excited about this. We're very selective in what we back, and I think that's slightly different compared to most funds. We're excited overall.
So you back select companies and you remain very excited about it. Priyadarshi, finally, if you could quickly tell us, you have a hybrid model, you partner with various other clinics. So tell me how you're going to up these partnerships considering your expansion plans going forward.
See, if you look at what we're really building is we're enabling last mile delivery of primary healthcare services leveraging technology.
Right.
So the markets that we are going to, a lot of our partners don't have access to those markets. So as we serve more and more partners, we believe there is a natural organic partnership model that will evolve and more partners will join us, because we are not delivering the end services. We're really a platform which is enabling partners to come onto our platform to deliver their services.
All right, Priyadarshi and Jyotsna, thank you so much for joining us on the show today, and we wish you all the best going forward.
Thank you so much.
Thank you.
On that note, it is time for us to head into a short break. But coming up next, pet care platform Supertails raised $10 million in a Series A funding round led by Fireside Ventures, Sama Capital and DSG Consumer Partners. A special conversation with the founders to know more about the company's initiatives on the other side. Stay tuned.
A pet care startup has recently raised $10 million from Fireside Ventures and other existing investors and hopes to use the capital to expand its product offerings, grow its own D2C brand, and also set up a full-stack pet care services platform in what it hopes is almost a $5 billion opportunity in the pet care market in the country. Joining me now are two of the three co-founders of Supertails, Varun Sadana and Aman Tekriwal. Varun and Aman, both of you, thank you very much for being with us here on CNBC-TV18. $10 million fundraise, and this is a significant jump from the $2.5 million we saw in the last round. How are you going to use this capital?
Thank you, Ritu, for getting us on CNBC today. Yes, so we started supertails.com last year. The idea was to serve the ever-growing pet population in the country. So, when we talk about this fundraise, so just to give you a small statistic, so, almost 80% of the people in the West who recently got a pet are second or third time pet parents. In India, it's actually the reverse of that. Right? So imagine a large set of pet parents who are very new to the pet care ecosystem, want to have a very fulfilling pet care journey.
Companionship.
Absolutely. They love companionship. So the first thing that we want to do is to spread more awareness of how to be I would say, a responsible pet parent. Right? How to solve for this companionship, right? The second obviously would be, to invest in our technology, right? So that's one stack that we believe is going to be a differentiator, have a world-class app for taking care of the whole journey of the pet parent, right? Investing in supply chain, right? We see how Indian customers really want faster, better deliveries, having the right assortment.
The pet care industry, perhaps in India, it is growing at a fast rate, almost at a 25% CAGR, if I'm not wrong. But it's not as large as the US.
Yeah.
What is the opportunity in India? I remember your press note itself said it's a $5 billion opportunity in the next few years.
Absolutely, Ritu. So I'll explain the entire opportunity, part with the help of 3 data points, right? So first of all, we have to understand India's fertility rate, right, which has declined from 4 in 1970 to
1990.
So yeah, 4 in 1970 to almost 2.1 in 2022, right? Whereas the pet population has grown from almost close to 1 crore in 2014 to more than 3 crores today.
So people are having pets instead of kids?
Absolutely,
Yeah.
Yes.
Yeah.
So that's the first data point. The second data point is, the number of pet parents who give packaged food to their pets is only 7% today, Ritu, in India.
So that's the branded market?
Absolutely.
The organized
right.
market?
Whereas if you look at the same number outside India, particularly in US and Europe, this number is upward of 70%. And the third data point is around the same, thing which I just spoke of. In US, an average pet parent spends more than $750 per annum on their pets, while in India, this number is less than $30.
What is the current revenue trajectory like? And you plan to almost double it? How will you do that?
Yeah, so we normally don't talk about our revenue numbers, but there are absolutely some things that we have to do to double it in the next 6 months. The first definitely would be to get more assortment. So today we have almost 10,000 SKUs, which is one of the largest pet care assortment in the whole country. The idea is to talk about some more brands outside the country which can come to India, but at the same time we feel there's a lot of potential in Indian brands as well, right? So how do you showcase them right so that people are able to discover them more? So that's definitely one part. Healthcare is something very, very kicked about. We really want more people to experience the right healthcare from the right vets, right? So we want to ensure that we spend the right amount of money in our expansion of getting more vets on our platform so that they can serve more customers. Lastly, we've talked about Henlo, our own brand, right? I think it's just sitting right there. India is at the cusp of being a very high quality pet food manufacturer. Traditionally, we've seen European countries like Germany, Italy to be leading in this. I think India is very well placed to be in the right space for one, creating a very high quality brand, and second, taking it international. And with Henlo, that's exactly we want to do that.
So you want to take Henlo international. Let me ask you actually, Aman, D2C is a relatively new area for a 2-year-old company.
Yeah.
What are your plans on that front? How big a portion of the revenue is D2C going to be going forward?
So we have just started with our first product.
Which is only for dogs.
Which is only for the dogs. Very soon, maybe in the next 3 months, we are going to launch another dog product, which is going to be a dog dry food. And then we'll be coming up with our next product, which we are discussing internally, but most likely it would be around cats. So we think that in 24 to 36 months from now, we expect close around 20% of our revenue to be contributed by our D2C.
Aman and Varun, thank you very much for being here with us on CNBC-TV18. It was a pleasure speaking to both of you.
Thanks a lot, Ritu.
Thank you, Ritu.
Thank you. On that note, we're going to wrap up this special conversation on Startup Street. Thank you for watching. But stay with us. The news continues on CNBC-TV18.